The Business Review brings you top financial news developments, influencing financial markets, international currencies, commodities, global commerce, tourism, and other economic events from around the globe.
Northwest China's Gansu province has stuck to strict standards and procedures for evaluating poverty alleviation program in its remaining poor counties as China's poverty work has entered the critical stage to eliminate poverty. There used to be 75 poverty-stricken counties in the province, and 67 of them has successfully cast off the label of impoverishment. According to the relevant regulations of the country, the 8 counties should receive the third-party acceptance inspection and poverty relief office of Gansu province. From November the 4th to the 6th, members of the assessment team officially launched a household survey in Dongjiang County. Following the principle of random inspection, inspectors picked Deng Lianhe, who has been out of poverty for 5 years in Kuijia village in Darban town, to be the object of assessment. He was lifted out of poverty in 2015. His family has 3 main sources of income: breeding, planting, and his son's employment. His income in previous years was above the poverty line, but this year 2 of his 3 income sources changed. In terms of planting, due to less rainfall, the total corn yield of his family is nearly 1,000 kilograms lower than last year. In addition, his son did not go out to work due to lumbar disc herniation. In recent years, Dongjiang County has relocated many poor families from mountainous areas to new buildings with better environment. How about the employment and production of the people after relocation? Well, have the old buildings been demolished and the land reclaimed according to national policy? These are what the assessment team wants to find out.
Iran introduced tougher restrictions to stem a third wave of coronavirus infections, including closing non-essential businesses and travel curbs, but state media reported widespread flouting of the rules. To encourage people to stay at home, the government has ordered the closure of non-essential businesses and services in 160 high-risk red towns and cities where more than 53 million people live, as well as a ban on cars leaving or entering these locations. A 9 p.m. to 4 a.m. ban on all driving is also in force for these areas. Rule breakers will be fined about $37. Lighter restrictions apply in some 208 lower risk orange and 80 yellow cities, where the fine for breaches is 50 million riyals. President Hassan Rouhani said in televised remarks the 2-week restrictions could be extended if the desired results were not achieved.
Chinese brokerages are predicting a stellar year for Chinese mainland shares as they expect the stock market momentum to carry over into next year. Huaji Securities predicts the benchmark Shanghai Composite Index could rise to as high as 3,800 points next year on the back of China's recovery after the pandemic, as well as the performance of some sectors. Pacific Securities shares Huaji's view that the index could reach as high as 3,800. And goes further, saying it will not get lower than 3,000. Northeast Securities is more upbeat about the market than its peers. It says annual profit growth rate for A- shares or stocks of Chinese mainland denominated in yuan and trading primarily in Shanghai and Shenzhen stock exchanges is expected to be around 10% in 2021. By the most optimistic estimates, it expects Shanghai index to gain another 1,000 points after reaching 3,800 next year. China International Capital Corporation, one of China's leading investment banking firms, remains cautious. They say the firm that economic recovery and the government policy should be factored in, noting that some COVID-19 stimulus packages could end when the economy finally gets back on track. The end of policies support could affect market sentiment, which is estimated to happen in the first half of next year. China Merchants Securities is on the same page with CICC. It states that since the second quarter of 2021, the market could face a greater downward trend.
China's top economic planner said China will raise the retail prices of gasoline and diesel. Under the current pricing mechanism, if international crude oil prices change by more than about $7.6 per ton and remain at that level for 10 business days, the prices of China's refined oil products like gasoline and diesel will be adjusted accordingly. The National Development and Reform Commission said as a result of a recent rise in international oil prices, China's gasoline price will go up by about $23 per ton, while diesel price will increase by about $22 per ton. The prices of 92 gasoline and 95 gasoline and 0 diesel will climb about $0.02 per litre. It is the fifth hike for oil prices in China this year.
Smartwatches are gaining traction in China, which is prompting health tech companies and online platforms to take notice. Guang Jizhong and his wife have been using smartwatches since August. According to the founder of a firm that makes wearable health management devices in Beijing, the company's expectations for the fourth quarter production have exceeded the combined sum of the previous 9 months. Industry experts say 5G technology will eventually flood the market with a large number of new wearable devices that can monitor and analyze the wearer's health. The result will be a better doctor-patient relationship and better treatment. Wan Hang, co-founder and CEO of Hodeifu, a Beijing-based online healthcare platform, said the health data can help doctors know their patients better and give better diagnosis and better treatment.
Improving the quality of listed companies is a key goal of China's capital market, according to speakers at the 2020 Yabuli China Entrepreneurs Forum this week in Yabuli town in the northeastern Heilongjiang province. As of November 17th, there have been a total of 4,093 listed companies on China's Shanghai and Shenzhen stock exchanges, which pay a tax equivalent to 30% of the total enterprise income tax. The profits of listed companies account for nearly 40% of the total profits of industrial companies, with annual revenues of more than about $3 million. Song Ziping, chairman of the China Association for Public Companies, said the improvement of the quality of the businesses will drive the development of the capital market. Song said for enterprises, the first point is to strengthen their main businesses, and the second is to innovate purposefully and effectively. Song added the non-intervention and the registration-based IPO mechanisms are based on the compliance operations of companies. Song also pointed out that there is a total of 170 million investors who have stock accounts, of which only 400,000 are institutional investors. Increasing the number of institutional investors remains one of the current priorities.
This brings us to the end of this episode of the Business Review. We hope to see you again tomorrow with news of stock markets, economic conferences, commodities, currencies, regional and international financial news, and much more.